Good morning, everybody. It's Wednesday, April 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Switching pages here, we got July corn down a quarter overnight at 470. July soybeans were down 10.5 at 1042 and a quarter, and July Chicago wheat was up a quarter at 525 3/4. This morning, we had an export sales announcement of 120,000 metric tons of corn to unknown destinations, and that was for 24. Also, in the outside markets, Dow sharply lower here, down 360. Negative GDP numbers here this morning, down 0.3%. Here in the first quarter, estimates were actually for an increase of 0.4%, so quite a big miss there. It's kind of broken the outside markets here a little bit early this morning. Also, ADP private payrolls were a pretty big miss, increased 62,000 for April. The estimates were looking for a number closer to 120,000. So with that, we've got first notice day here today, guys. We got month end. By all accounts, in most areas, we've got a pretty good window for planting. So it feels like the more and more we hear, guys are rocking and rolling there. So that's good news on that front. But with that, Dustin, maybe a few thoughts here as we have now approached the month end, first notice day, what your thoughts are, and then we'll throw it around the room.
Yeah, thanks, Dan. Yeah, I think one thing, I didn't really have this prepared in a nice image for you, Jack, here, but if you can show the screen. This is the 5-day net change of corn going into the day prior to first notice day for the last 9 first notice days, including yesterday. So I think it's, again, it could be coincidence, anecdotal. I think a lot of what we've seen, though, like yesterday, for example, May was the worst contract on the board for corn. Any open contracts that need to exit on the short side, right? They need to sell out of a long. They really are kind of crammed into a very short period of time. So just a very simple test. Take the 5-day net average change for the last 9 first notice days, pre-first notice days, and it's pretty evident. We have an average of 13.5-cent drop coming into that period. I don't know if that's what's happening now. I mean, we've got some pretty, bearish things that are happening, like in Brazil, pretty good weather at the right time. That could easily explain this, but it is, I think, a little bit clear because the spreads are doing a lot of the work. The May contract in particular, that it could be a contractual problem, and we'll know, a week from now if we see a bounce back. A lot of that might have been just excess weight going on the May contracts going into a key date.
Yeah, Justin, a continuation of a sharp drawdown in open interest to another 77,000 corn, 41,000 beans. Also, I noticed for meal, 22,000, almost 23,000 drop for meal. So what, any thoughts there?
Yeah, I mean, I think this goes along to what Dustin's talking about. When you have, when you have the longs, right? And the longs are, basis only contracts in the physical market or spec longs. Any long has to get out before first notice day, unless you're, into the commercial game and you're trying to actually take physical, which is a very small percentage of the market. Those longs have to roll or get out. And, when you turn the technicals down and when you start from a, decent long fund position, it accelerates. And when you have, especially when you have bearish news on top of it. So it's something we've talked about for a long time, and it's been going on for decades, to be honest with you. If you were in a bull market, you'd always say you got to wait to buy on first notice day, right? Because just the natural forces, you have more, not to sound cheesy, more sellers than buyers, right? You've got farmers out planting, busy. They're getting calls from the commercial last few days, like, hey, you've got these open contracts. What do you want to do? You want to roll or sell? Both those things put pressure on the market, whether it be flat price from just flat selling or from spread widening, because they're rolling their long forward in the market. So all those things happen, there's a reason that they happen. It's because a lot of people like to wait to the end, and then they get forced to make a move. So, and then a lot of times once that's over, the next decision's, the July contract, for example, right? So you kind of see the forced selling, so to speak, subside and then markets kind of rebound. So that's just a typical thing. Obviously, I think the years where that doesn't happen, you've got strong enough fundamentals where the commercials are willing to step in and take ownership because you have a really good cash market or whatever the case may be. You can see even in those years, it's up marginally at best because that selling pressure is so big. If you look at the open interest of corn, million plus contracts, right? And hundreds of thousands are in the nearby that have to roll. So yeah, I think that's just a structural thing as Dustin talked about. And then you throw in, all the uncertainty with everything going in the outside markets. It's hard to find a big sponsor to come in and take it. So
Sure. Ben, what's on your mind this morning?
Mentioned either late last week or early this week that I hope that first notice day didn't do enough to undo some of the positive momentum that we had on the charts, mainly being above all the major moving averages. And yesterday we dug pretty deep into that, sitting below the 50, the 100, and the 20 now. In July, still above the 200, and December corn is fully below all major moving averages. So you kind of hope that it doesn't create a swoon here for more selling or more exiting of long positions. That's would be my biggest concern today. And I think the markets are really starting to feel not just the calendar a little bit on top of first notice day, which you hopefully we look back and here and we go, okay, that was mechanical, this is normal, and we see some sort of a rebound. But in the event that we don't, it's just on good planning pace, a lot of concern about outside markets. Are they going to throw a wet blanket on grains here for a little bit? So.
Oh, very good. Rather than really, let's move over to livestock here. Choice cut was up another $5 yesterday. So put that on top of $6 on Monday. We got quite a rally here in the outsides there. And then, I think continued Chinese rhetoric is kind of put a little bit of the brakes on hogs. So what are your thoughts here as we start the day?
Yeah, no question. The beef market has just been explosive, so choice up to 348. We got new highs in the futures and still expecting Packers pretty much to pay up this week. I mean, I think at this point we've seen a little bit of cash trade at 350 in the north for dressed, but just not quite enough to wrap your head around just yet. But open interest was up another 3,200 contracts. So I do think now that we're starting to see the back end of the market start to trade over that $2 level, we're really starting to see a lot more interest just from a hedging standpoint. But there's still quite a bit of optimism here. I mean, it's that time of year. I think just overall beef market should be pretty firm going into this time. We should see demand start to ramp up, but some of the outside data and some of the outside talk may start to bleed in here. A drop in GDP, some consumer confidence getting shaken up here. I mean, all this could lead to some problems for beef down the road. So we'll see how that trickles in, but otherwise we're still in a tight cattle environment. We're seeing the impacts of that right now, and we're seeing the Packers kind of pare back on their slaughter rates just to keep that beef price up so they can get maybe a little bit of margin back here. So the trend is still positive. We are getting into overbought territory, so we would not be surprised to see a correction, a little bit more aggressive hedging towards the end of the week, but overall the sentiment's still pretty positive as far as the market goes in general. But yeah, on the hog side, I think we saw a little bit of weakness, kind of hit a little bit of a wall yesterday. You had a couple things going on, and I think that geopolitical risk is still on the table here. We got the new Canadian Prime Minister, who obviously is going to be taking the hard line against this administration. And I think the market just got a little bit concerned that trade negotiations may be a little bit rough on the tariff side between those two countries, and then on the other hand, with China, so that's going to be kind of in the forefront, maybe for longer term. So I think right now, day to day, just kind of focusing on the performance of the cutout and cash prices were up 288 last night. So it may give a little bit more confidence that, we can still keep some of the premiums in the back end of the market for now before we get into kind of peak seasonal demand.
Very good. Appreciate the update there. A couple things to note. Tomorrow morning, we'll have weekly export sales out at 7:30 Central. We'll take a look there and visit about that in the war room. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open at 8:15 Central Time on X, Facebook Live, and YouTube Live. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.